In a dramatic escalation of economic tensions, former President Donald Trump has issued a stark warning by threatening to impose a 150% tariff on BRICS nations if they discuss alternatives to the US dollar, revealing fears about America's grip on global finance. The BRICS alliance, Brazil, Russia, India, China, and South Africa, has been working to establish an independent financial system that could challenge US dollar dominance. This move has clearly rattled Washington, with Trump's aggressive response raising eyebrows worldwide. If BRICS is truly insignificant, why such a severe response? The answer lies in growing anxiety within American financial circles about their waning control over global markets. For decades, the US dollar has been the world's reserve currency, giving Washington unprecedented power over international trade and finance. This position has allowed America to wield enormous influence through systems like SWIFT and impose sanctions on nations that don't align with US interests. The foundation of this dominance rests on the petrodollar system, established in the 1970s with Saudi Arabia, ensuring global oil transactions in US dollars and forcing oil-importing nations to maintain USD reserves. However, BRICS is now challenging this status quo. Their exploration of alternative financial mechanisms represents a direct threat to America's economic hegemony. The possibility of a new system bypassing US control has created panic in Washington. This mirrors past challenges to US financial dominance, when nations attempted to trade oil in alternative currencies. The response then, as now, was severe, highlighting America's determination to maintain supremacy. Trump's threatened tariffs would punish any BRICS nation considering moving away from dollar dependence. This extreme measure demonstrates the lengths American leaders will go to protect their financial power. Ironically, such aggressive tactics might accelerate the erosion of US dollar dominance. The world watches as this financial power struggle unfolds, potentially reshaping the global economic landscape for generations to come. In a significant development reshaping the global economic landscape, BRICS nations are challenging America's financial supremacy. China and Russia have reduced their dependence on the US dollar, with over 90% of their bilateral trade now in yuan and rubles. India has begun purchasing Russian oil using rupees, bypassing the dollar-based system. Saudi Arabia and the UAE are considering selling oil in Chinese yuan, potentially ending the petrodollar system. The International Monetary Fund confirms this trend. The dollar's share in global reserves has fallen from 70% in 2000 to 58% in 2023, with experts predicting further decline. China's digital yuan, being tested for international oil trades, presents another challenge to US financial dominance. Former President Trump's threat of 150% tariffs on BRICS nations reflects growing anxiety in Washington. If BRICS establishes an alternative global reserve currency, it could strip the US of its most powerful tool for global influence. The implications are significant. Without worldwide reliance on the dollar, America's ability to impose sanctions, control capital flows, and manipulate markets would be compromised. The US economy depends heavily on global demand for the dollar. If BRICS nations continue trading in their own currencies, this demand could collapse, potentially triggering severe inflation in America. This explains Trump's aggressive stance against BRICS's financial ambitions. The bloc isn't merely creating an alternative currency, it's challenging US global economic leadership. Washington must either adapt to a multipolar financial world or risk an economic crisis as its financial leverage erodes. The stakes are high. As BRICS pushes forward with its de-dollarization strategy, America's financial power appears increasingly vulnerable. Trump's tariff threats reflect an attempt to maintain US economic dominance in a changing global financial order. For more updates on this developing story, stay tuned to our channel. In a significant shift reshaping global economics, BRICS continues to expand despite threats of extreme tariffs from former President Trump. The alliance's growth shows changing world order, with Egypt, Ethiopia, Indonesia, Iran, and the UAE joining in 2023, marking a substantial geopolitical transformation. Trump's proposed 150% tariff strategy faces scrutiny, given historical precedent. Previous aggressive tariff policies against China in 2018 led to retaliatory actions hurting US exports and raising domestic prices. Current data suggests severe tariffs on BRICS nations could backfire. The US depends heavily on BRICS imports in electronics, rare earth metals, pharmaceuticals, and agricultural products. Analysts warn substantial tariffs would likely trigger price increases and inflation. BRICS members have shown remarkable adaptability in diversifying trade. China has expanded into Africa and Latin America, while Russia strengthened energy partnerships with India and Middle Eastern nations. Brazil and South Africa have deepened economic ties with China and European markets. Bilateral trade between China and Russia reached $240 billion in 2023, showing Western isolation attempts' ineffectiveness. India's increasing energy purchases from Russia further demonstrate reduced dependence on U.S. markets. Several nations, including Argentina, Saudi Arabia, Nigeria, and Thailand, are pursuing BRICS membership, indicating the alliance's appeal as an alternative to Western financial systems. This expansion suggests Trump's policies might be achieving the opposite effect, fostering greater economic independence among member states. As global trade patterns evolve, these developments impact American economic influence. The shift represents not just a challenge to U.S. market dominance, but a fundamental restructuring of global economic power dynamics, with BRICS nations shaping future international trade relationships. In a dramatic shift of global economic power, African trade partnerships reached $282 billion in 2023, marking a move away from Western-dominated financial systems. This transformation signals nations seeking alternatives to traditional U.S.-led economic structures. Trump's aggressive tariff policies created unexpected ripples across international finance. By imposing substantial tariffs on Mexico and Canada, he inadvertently pushed these nations toward China. The European Union is now exploring alternative financial mechanisms amid concerns over U.S. sanctions and dollar stability. BRICS nations are architecting a new financial framework. Russia's proposal for a gold-backed BRICS currency challenges U.S. dollar supremacy. Unlike the dollar, this currency would be anchored by tangible assets, offering stability and inflation protection. China's digital yuan, tested in international oil transactions, proves viable alternatives exist. Major oil producers, including Saudi Arabia and UAE, are exploring yuan-based oil sales, potentially ending the petrodollar system that has supported U.S. dollar dominance. Trump's threatened 150% tariff on BRICS nations appears counterproductive. Rather than deterring BRICS from pursuing financial independence, such measures accelerate their determination to create autonomous economic systems. Each U.S. restriction prompts BRICS to develop more sophisticated independent operations. The global financial landscape is transforming. As nations seek alternatives to U.S. dollar dependency, BRICS offers a compelling option. Their proposed system, combining asset backing with digital capabilities, could reshape international trade. This evolution suggests that attempts to maintain U.S. financial hegemony through punitive measures may hasten its decline. The future of global finance appears increasingly multipolar, with BRICS central to this new economic order. In a startling development, former President Trump's threat of imposing 150% tariffs on BRICS nations has exposed a critical weakness in America's economic strategy. This desperate move may accelerate the end of U.S. dollar dominance. The BRICS alliance, comprising Brazil, Russia, India, China, and South Africa, isn't just surviving, it's thriving and expanding. Their move toward financial independence represents a shift in global economic power. More nations now view BRICS as a viable alternative to the U.S.-led economic order. This development mirrors historical patterns of declining empires. When Rome tried to maintain control through excessive taxation, it hastened its fall. Similarly, these proposed tariffs might push more countries toward de-dollarization faster than before. Several nations are already developing independent trade networks, moving away from dollar dependency. This isn't just about economics, it's about restructuring global power dynamics. The U.S. dollar's share in global reserves is declining rapidly, while alternative financial systems gain momentum. The BRICS coalition proves nations can prosper without excessive reliance on the dollar. This reality check is particularly stinging for Washington, as traditional economic pressure tactics appear ineffective. Looking ahead, we're witnessing the birth of a multipolar financial world. The question isn't if this transition will happen, but how quickly it will unfold. Despite Washington's resistance, the era of singular American economic dominance is ending. We invite you to share your thoughts below. Will these aggressive tariff threats work, or will they backfire? Subscribe to our channel and hit the bell icon to stay informed about these crucial developments that mainstream media often overlooks. We're committed to bringing you unvarnished truth about political and economic power shifts. Remember, while many focus on surface-level politics, we dig deeper to reveal the fundamental changes reshaping our world. Stay tuned for more analysis.